Hi CS students, let's revise CA Final AFM Chapter 5 Security Valuation. Practical question 10. Calculate the value of share from the following information. So they have given a set of information. Using that we have to calculate the value of share. So the set of information signifies that through free cash flow to equity, through that method we have to find out the free cash flow. Then that free cash flow acts as a dividend or something for the dividend discount growth formula. So as we can see here, the value of share is found out by free cash flow to equity, then multiplied by 1 plus g divided by ke minus g. Now how will we find out this free cash flow to equity? Before going further, let's see what is this free cash flow to equity signifies. Free cash flow to equity is the cash available to equity shareholders of a company after meeting all its operating expenses, interest payments, if there are any debt repayments, and any capital expenditure or working capital requirements, all those things. So what will be the net cash available to equity shareholders after meeting all these expenses? Normally cash flow covers only P&L part, but this free cash flow to equity covers balance sheet part also, like debt repayments and capital expenditure requirements. Okay, now since we need to find out this free cash flow to equity, we will be arriving from the net income. First we have to find out net income. So they have given profit after tax, then they have given equity share capital, then per value of share. So if we divide this equity share capital divided by per value, we will get the EPS. Now as we can see, EPS is 8.923 crores. Now this EPS we found out by PAT, like profit after tax divided by number of shares, will get the EPS. So 290 crores, which is nothing but they have already given, and the number of shares we have found out that it is 32.5 crores, 1300 crores divided by par value of share, sorry, it is par value of share 40 and 32.5 crores. 290 divided by 32.5 will give us 8.923. now this 8.923 is the net income, but since we need free cash flow to equity, we have to find out the free cash available to shareholders. So this is not the free cash available to shareholders, this is just the net income which we got. But after this, as we can see in the question, there are some capital expenditure involved, and even there are some depreciation charge has been given, which is a non-cash item which we should add back to it, or we can net off like this also. I'll explain in a while. Then there are some capital working capital changes also. So giving effect to this net income minus, they have taken 1 minus b. What is this 1 minus b? Since in the question they have given debt ratio of company is 27%, it is assumed that the company is partly financed by debt. Means whatever expenditure happened, like capital expenditure or changes in working capital, 27% is borne by outsiders, which is the debt lenders. So the rest of the portion will be borne by equity shareholders. So 1 minus 0.27 will give us 0.73. This much portion will be borne by our shareholders. So that percentage of expenditure should be reduced from this net income. So 1 minus 27%, and then capex will be capital expenditure minus depreciation charge. Depreciation is a non-cash item, so we will be adding back, or we can reduce from the respective capital expenditure also. 47 minus 39, and then multiplied by this 1 minus debt ratio will give us the equity shareholders contribution, equity shareholders portion. Then we are adding back working capital. Change in working capital is positive, so which signifies business has invested cash to support the operations. That's when the working capital will be positive, which is a cash outflow. Again, that has to be reduced from net income. So considering this FCFE formula, which is free cash flow to equity formula, if the working capital is positive, then we have to reduce. If it is negative, then we have to add back. That's it. Now after doing all these adjustments of capex minus depreciation and working capital multiplying with the equity portion, we are arriving at a value of 0.5645. so this 56,45,000 will be the free cash flow to equity. Now we have to find out cost of equity. They have given beta and then the long run growth of the company, which is nothing but the growth rate. Then they have given market returns and then free cash flow we know, and beta also they have given us 0.1. so using CAPM model we can find out the KE, the cost of equity. We have arrived at a value of 8.86. now this will be the KE. We can substitute in our value of share formula. So FCFE multiplied by the growth 1 plus growth rate divided by KE minus G, we are getting a value of 70.89. so this will be the value of share. Thank you.